Hello everyone, this is D971 back with another video, and today I'm going to take a look at XLF. So XLF is an ETF that checks the financial sector of the S&P 500 and contains stocks like JP Morgan, Bank of America, and Berkshire Hathaway. Those are the major holdings. So here we are on a monthly chart, and I want to point out that actually recently, before the crash in March due to the corona, we actually topped around the 31 level, 31.5, and that's actually also exactly where we topped in at the start of the financial crisis in 2007-2008. So that's something I found very interesting. Now, does that mean that I think that we'll actually visit these lows around $5? Definitely not. Because I think that when you take a look here, it actually looks like 5 waves. 1, 2, 1, 2, 3, 4, 5, 4, 5. This 5 wave is really short, but it could make sense that it's sort of truncated due to this being a double top. So having said that, now we've seen 5 waves. It would be logical to expect a major 3-wave correction towards, sorry, missed the fib, towards the 0.618, which would be around the 15 level, 15 to 14, right here, around this level. So yeah, that would be my initial target when just looking at the major chart. This is a monthly chart, and when you think that this is a 5-wave impulse, this would be the most logical target. Let me now go to the more recent price action, to the daily chart, right here. Let me remove these fibs. We did actually hit the 0.5, but not the 0.618. And the reason I don't think that this is finished yet is because this is way too impulsive. This was, let me remove the fib tool first. I think we saw a decline of around 40, almost 45% in around a month. So that's actually very impulsive. And when we look here, actually we saw a 3-wave move up, some sideways consolidation also in 3 waves, and then another move up. And actually when you look at this trend line and make it a channel, we can see that this wave C perfectly stopped at the channel. When we look further into it actually, and when we look at the fib tracement, we can see that we slightly breached the golden zone, but immediately the day after it gapped down again and sold off. So that's very interesting. It seems like we hit something here. If this actually hits the fib target, that would put us around the 14 level. So let me mark this down. Let me make it green as a potential buy zone or potential zone of support. So this would be just a target, a major target when looking at this internal retracement. When we then look at the fib extension, top here, bottom here, assuming the top was here, we can see that the 1-to-1, this is the log tool by the way, is around $15. So let me increase the range a bit, which is also very interesting, and I think I showed it before, but when we go to the weekly and look at the major retracement, we can see that it actually also is smack in the golden zone. So I think that's very interesting, that all of fib targets are pointing this way, and also the very beautiful channel right here went to the golden zone before rejecting. Then also we recently broke down from the channel, but this break wasn't impulsively because we've been backtesting this channel for quite some time now. But something interesting I found is that this might be some completed structure. Let me go to the 4-hour for that. And when we look right here at the FIP retracement for this, we can see that we're almost. We'll move this. Sorry, that was the wrong one. We'll move this rather. When we look at the major FIP retracement, let me tidy this up right here. Then we can see that we would have a target around here. The golden zone is right here. So this would be a nice place to sell because this is a golden zone in a golden zone. Because we had this major golden zone right here, of course, where this stopped. And so this would be could be a sort of 1-2 setup actually. This doesn't look too clean, to be honest. It's kind of hard to interpret this. You could interpret this as a 1, 2, 3, 4, 5, but I don't really like how asymmetrical it is. But it's definitely possible to interpret this as a 5-8 move. Either way, when we look at this structure right here, which to me does look like a 3F corrective move, let me show you that as well. Values A, B, potentially C, which I think C will go to. And this is just some kind of more sideways corrective price movement. And so when we look actually at, let me hide this FIP retracement. We've marked the golden zone with the green box, and when we then, when we then look at the FIP retracement, we can see that we hit the 0.32 in a 3-wave move, A, B, C, and then we actually moved up from there. We hit the 0.382, and actually what I usually see, or what I've often seen, this is more of anecdotal evidence, but that if the retracement is kind of shallow, for example the 0.382, that often we will visit the second FIP target, the minus 0.382. This is something I've observed, and I noticed this over time from looking at many charts. So actually, it would be quite logical to see a price, to see profit taking from some algos at that point. So that's very interesting, I think. I don't remember if there was also a FIB extension relationship, but let me take a look at that. Maybe it was the linear. Yeah, I mean the 0.786, but that could be just coincidence as well. So that's not too significant probably, but I mean it's kind of a factor, I guess. But that isn't too significant. I think the most significant is the golden zone right here and the FIB targets of this retracement. So yeah, what am I looking to do? Let me redraw the golden zone for this. Is if we get to this level right here, the green box, I'm actually, let me change it to red for sell zone or resistance zone. If we get up to here, I think it might be a nice opportunity to take a short position where the stop is the golden zone, of course, which in this case would be around 25.31. They did run the stops here as well, as they wicked through the golden zone, so you might widen this a bit as well to maybe 25.5, or maybe even if you don't mind the larger risk, maybe even to 26. That's something you have to decide for yourself. But I think that this might be a nice trade to at least for this smaller retracement take it up to the 21.5 level. But when you take a look here, you can see actually that here is a kind of big gap, so that gap wouldn't be filled. And if you want to see more upside, if you're really bullish, you rather want to see this gap filled as well. So we might actually go to the second FIB target right here to fill this gap. Of course, if the larger count that I laid out will work out, this of course is a 1-2, and we might actually get to much lower and actually take out the previous lows as well. I think that from a technical point of view, this chart looks pretty good, but the fundamentals are a little bit more complex in my opinion, as the Fed of course is printing a lot of money. The financial sector has taken a really big hit from the coronavirus, or during the coronavirus sell-off, and it hasn't rebounded too much, definitely compared to the tech sector, for example. So if the indices start to sell off from here, of course XLF definitely will follow and might again be the weakest, one of the weakest sectors of the S&P 500. If that's the case, we might get to these much lower targets. But if the indices keep holding up, of course, this trade might not even play out at all. So that's something to keep in mind. So those were my thoughts on XLF. Thank you guys for watching, and bye.